Hello and welcome you into Good Morning Market Cafe. I'm Ankita Saxena and with me is Shishti Sharma in the next 1 hour. We'll take you through all that transpired in the global markets and the cues you need to watch out for before the start of the street today. First up, let's take stock of how the Wall Street shaped up yesterday. Now remember, we also saw cuts coming in as far as the US markets are concerned. In fact, there are renewed fears of artificial intelligence disruptions to various industries. In fact, President Donald Trump threatened to hike the global tariffs to 15%, and tensions between UN and Iran have also kept the traders on the edge. Now, let's take a look at how the stocks closed up. Dow Jones closed lower by nearly 822 points, 1.7% drag lower by a roughly a 13% loss on the IBM shares. We also have tech-heavy Nasdaq that declined 1.1% and S&P 500 that shared about 1% in the trading session. In fact, Microsoft and CrowdStrike were also notably big losers during the session, along with cybersecurity stocks and a slate of financial sector names that were also declining on the fears of AI. So AI fears are back on the street, and we did see Wall Street that traded in the red in the previous trading session.
Well, absolutely. Very sharp fall with respect to all the benchmark indices is what we have seen overnight. But when it comes to the energy market, it was oil that was seen to be a bit steady at its 6-month high levels. Investors are monitoring the talks between the US and Iran, and the meet is expected to be happening on Thursday. So we will watching out for more updates on that. But as of now, Brent oil is hovering around that $71 per barrel mark. But along with that, when it comes to the gold as well as silver, there's no stopping there because the safe haven divan is seen to be coming back on street. Precious metals, gold is seen to be retreating and is seen to be hovering around that $5,190 per ounce mark. When it comes to the silver prices, that too is seen a bit of an uptick this morning and hovering close to that $87 per ounce mark. So yes, again, we are seeing gold as well as silver prices inching higher.
All right, moving on then. Trump says he does not need Congress's approval to impose new tariffs despite a recent court setback. In a post on Truth Social, Trump claimed his powers had already been authorized and reaffirmed by the Supreme Court. He warned that the countries playing games with the ruling could face even higher duties. Meanwhile, reports suggest that Trump is considering fresh national security tariffs on key industries.
And Indian exporters to the US will attract a fresh levy of 10% starting today following the Supreme Court ruling that struck down the earlier emergency tariffs, wherein customs have halted the collections under the IEEPA law, but other duties remain in place. Trump has since threatened higher tariffs even as exporters await clarity. India was expecting tariff relief under the interim deal, but talks have now been postponed. Let me take it across to my colleague Sumita, who joins in with more details.
India's exports to the United States will attract a penalty of 10% according to what the Supreme Court ruled in the United States. And in fact, US CPB or Customs and Border Patrol in a communication said and announced that they're halting collections of tariffs that are imposed under IEEPA. In fact, it also said that the collection halt of IEEPA tariffs does not really impact other tariffs that have been imposed under Section 232 and Section 301. Remember, the US Supreme Court a couple of days back struck down tariffs, a Trump administration sweeping tariffs under IEEPA, calling them as illegal. In fact, the US is likely to pay back about $85 billion in tariff revenue to affected parties, affected countries, is something that Morgan Stanley has also suggested. Now, hours after the Supreme Court's decision, Donald Trump attacked the US Supreme Court, and he said that he's announcing a hike in tariffs to 15%, although there is no official order on that as yet, and which is why there is uncertainty amidst the exporters community here in India, because we export all sorts of materials. In fact, it includes textiles, it includes electricals, electronic equipment. Pharma is also a major component. Then there is gems and jewelry as well. Our overall exports to the US, they account for about 18% of India's total exports, and which is why clarity and certainty is the need of the hour. But exporters are waiting to hear from either the Indian government or the US administration. In fact, the Commerce Ministry here in India stated that they are studying the implications, they're studying the matter. And of course, we are also waiting to hear from the Indian administration on that. But more importantly, a team from the Indian Commerce Ministry was expected to travel yesterday. They did not travel. So talks related to the deal are deferred. The framework deal, which was agreed upon by both the sides in January, the framework for which had been finalized.
And well, let's move on then. Shares of IBM plunged more than 13% after Anthropic unveiled a new AI tool that threatens a key part of the IBM's legacy business. Anthropic says its Claude Code platform can modernize systems built on the COBOL, long dominated by IBM's mainframe services. Investors fear AI could sharply reduce demand for the costly legacy upgrades.
And moving on to another story, and it's Paramount Global that has once again submitted a higher takeover bid for Warner Brothers. Reports say that the revised offer improves on Paramount's earlier $30 per share proposal and aim to address the financing concerns. Warner shareholders are set to vote on Netflix bid next month, though Netflix retains the right to match any higher offer.
And shares of Novo Nordisk plunged more than 15% after its next-generation weight loss drug failed to match a key trial target. The company said that the Sagrasima did not prove it was an effective rival treatment, tripeptide from Eli Lilly. Now, the stock has now fallen to its lowest level since 2021 as competition intensifies and the pricing pressure grows in the US. Investors are increasingly worried about the Novo's ability to defend its leadership in the obesity drugs.
And FedEx has sued the US government seeking a full refund of tariffs imposed under Trump. Now, the move comes days after Supreme Court ruling. FedEx is the first major US firm to file for refunds after the verdict. Now, the case will be heard by the Trade Court, which has exclusive jurisdiction over such claims. Now, the company says that the no formal refund mechanism has yet been announced.
And the Canadian Prime Minister, Mark Carney, is set to visit India as a part of the three-nation Indo-Pacific tour from February 26th to March 7th. The visit is aimed at strengthening trade, investment and strategic ties, with talks expected on the potential free trade agreement. We have Sumit House joining us with more.
That's right. Canadian Prime Minister Mark Carney is all set to visit India amidst global trade uncertainties. In fact, his visit has been confirmed by the Canadian Prime Minister's office. In fact, this travel is part of a three-nation Indo-Pacific tour from February 26th to March 7th, 2026. In fact, he will be visiting, like I said, India, Australia and Japan. This tour or this visit is aimed at boosting trade, investment and strategic ties. In fact, he will be meeting with the premiers of these three countries. He will also be meeting here in India business leaders during his India visit. And in fact, both the sides could also launch negotiations with respect to a free trade agreement. Now, remember, both the sides, the Canadian Prime Minister and the Indian Prime Minister, when they met last year at the G20 summit, they had spoken about launching FTA negotiations. So what else is Canada essentially looking at? It's looking at partnerships in trade, energy, technology, AI and defense. So this is going to be an important visit. This is also important because this is the first visit that Mark Carney is undertaking after becoming Prime Minister. And earlier there were tensions between Canada and India on account of the remarks that were made by former Prime Minister Justin Trudeau. In fact, this is also happening at a time when Donald Trump's tariffs have once again caused a lot of uncertainty in the global economy. And Mark Carney essentially has hinted towards that when his office made that statement. He said that in a more divided and uncertain world, Canada's new government is focused on what we can control. That is, we are building a stronger, more independent and more resilient economy. In fact, Canada has also reacted to the Supreme Court's judgment on Trump's tariffs, and it said that IEEPA tariffs imposed by the United States are unjustified. So, of course, this is going to be an important visit. We could look at a lot of conversations around what's happening in the global economy on account of trade and tariffs. And of course, one needs to watch out for whether there's going to be a formal announcement on the launch of FTA negotiations.
All right. Thank you so much, Sumita, for that. But time now to slip into a very short break. We'll be right back.
Welcome back. You're tuned into Market Cafe and we're taking you through all the cues you need to watch out and the trade setup before the start of Day Street. Let's talk about the Asian handover then. We do see Asian markets that have opened up mixed on renewed AI fears and also that verdict coming in from Trump where he said on Truth Social that any country that is fooling around or playing games with the Supreme Court's decision on tariffs will be met with much higher tariffs. So we are trading mixed as of now. We did see, remember, the US cybersecurity names that slid as AI tools raise concerns of disruption. So AI fears are also back in the market. But back home in Asia, we have investors that are waiting out for China's loan prime rate decision. And we had the Asian markets are finally, the Chinese market have finally opened up after that long holiday. And today, if you look at Hang Seng, that's trading with cuts of 0.6%. We also have Shanghai. Shanghai is actually trading up. That's trading up 1% in the trading session. We also have Nikkei. That's trading up with gains of 0.7%, and Kospi that is up 0.8%. We have S&P ASX 200 that is trading with cuts of 0.2%. So mixed moves coming in there. But let's take stock of how the GIFT Nifty has also opened up to get a sense of where Indian markets can open up. 97 points downtick is what we are seeing. In fact, almost 100 point cut that we are expecting on the Nifty. So expect a negative start, a negative Wall Street handover coming in, and Asian markets also trading mixed as of now. But let's talk about the day gone by. Nifty had ended yesterday's session in the green. We were extending, gains for a second consecutive session and closing comfortably above the 25,700 mark. Nifty Bank also ended higher for the second straight session, and in the broader market, it was the mid cap that was on the back foot that ended the session in the red, while small cap snapped a two-day losing streak to close in the positive territory. Now, overall, the market sentiment remained rather constructive, with the majority of sectoral indices finishing the day in the green. Let's talk about the buzzers, or the ones that did well. Well, the top performers was Adani Ports, Kotak Bank. We had Dr. Reddy Labs that was doing well. But what was not doing well was Hindalco, Infosys and Wipro. Now, remember, Nifty IT has been really under pressure. And today also, there is a negative handover on the IT front on renewed threats from AI. So IT could see further downside as far as Indian IT is also concerned. But let's talk about some of the sectoral indices. Some sectoral indices also closed in the green. Most of them, well, the top loser though was Nifty IT that was down over 1%. Now remember, we are seeing fourth consecutive session of decline on Nifty IT, and today also doesn't seem to be all rosy for the IT pack. We had Nifty Energy that gained for the second consecutive session. FMCG also extended gains. We also had Auto that was up for the second consecutive session, and Pharma also ended higher for the second session. So that's how largely the market shaped up yesterday.
All right, so that was all about yesterday's action. But coming today, let us tell you which are the stocks that you should be watching out for in today's trading session. And first up, the counter that is going to be in focus is Bharti Airtel, as the company informs that they will invest 2,000 crore rupees in their NBFC arm to scale up the digital lending investments to be made over next few years, wherein Airtel will hold 70% stake and the remaining 30% to be infused by Bharti Enterprise. Now, capital infusion is actually aimed at expanding the formal credit access, and that will help build strong credit engine and analytics capabilities over the next last 2 years that the company has already been working on, and that will help the company scale up their NBFC operations. Now, the digital lending platform has already disbursed over 9,000 crores under LSP model is what the company has also informed. So they have been working on this particular model, but yes, 20,000 crores is what they are committing right now. Other than that, MobiKwik is going to be in focus as their arm gets BSE nod to commence the stock broking business. So positive news flow over there. Waaree Energies will be in focus as well on the back of an order win. The company has secured domestic deal to supply 500 megawatts of solar modules when solar modules deliveries are scheduled for FY 26 and 27. So let's watch out for this counter. The next stock in focus will be Pace Digitech, one of the recently listed counters, and yet again a positive news flow as the company has bagged a new order win worth 159 crores from Reliance Industries. This is an order for supply of battery packs of lithium mines. And lastly, Lupin is going to be in focus on the back of a positive news flow as the company gets European Commission nod for biosimilar ranibizumab, wherein analysts do expect $25 million of EBITDA contribution by FY29 from this particular drug. So positive news flow indeed coming in on Lupin.
All right, so those are the stocks that you need to watch out for in today's trading session. But let's talk about the cues that you need to watch out for. With that, my colleague Ishika is now joining us.
Here are the cues to watch for 24th February. First of all, let's talk about the US. Donald Trump is expected to deliver the States of the Union address and policy priorities for the year ahead. We also have the Apple annual general meeting on 24th. And talking about China now, China loan prime rates are to be announced on 24th. And in terms of global earnings, we have Standard Chartered as well as Singapore Airlines and Schaeffler India in terms of the Q3 India earnings. Now talking about the corporate actions and our board meetings, Healthcare Global is to mull fundraising along with IIFL Finance, who is also to mull fundraising via the issuance of NCDs. Now talking about IPOs, PNGS Reva Diamond Jewelry IPO opens as well as Gaudium IVF IPO closes on 24th, and other events include Chicago Fed President Austin Goolsbee and Fed Governor Lisa Cook to speak. In a separate event, we also are expecting Atlanta Fed President Raphael Bostic to speak. And those are the cues that we can watch for 24th. Back to you.
All right, thank you so much, Ashika, for getting us all those details. So those were some of the cues that you should be watching out for. But coming back to the stock list, let me take it across to my colleague Ashesha, who is standing by to tell us which are the other stocks that you should be watching out for in today's trading session. Good morning, Ashesha.
Good morning, Shrishti. And first up, let's talk about Chalet Hotels because the stock will be in focus on the back of their expansion plans. The company did inform the exchanges that they've approved development of 330-room hotel in Hyderabad. The project will be worth about 630 odd crores and it is likely to be completed by FY29. So on the back of their expansion plans, keep an eye out on Chalet Hotels. Cyient Limited, meanwhile, again, this is on the back of an expansion where the company has incorporated a new entity in the United States of America. This is to support and expand its operations in the aerospace and defense industry. So on the back of their expansion plans, keep an eye out on this IT company. Remember, the entire sector was in focus yesterday, and today, of course, the sector will continue to remain in focus. Patel Engineering, meanwhile, on the back of an order win, where company's joint venture has received an order worth about 133 odd crores. They have won as the level 1 bidder for a project in Maharashtra, and the company's share in this particular joint venture stands at about 68 odd crores. So order win is the reason why Patel Engineering will also be in focus today. Shringar House of Mangalsutra, a recently listed entity. The company inaugurated a new manufacturing facility in Kandivali in Maharashtra. It will be relocating operations from its previous unit in Lower Parel. Now, the company said that this is likely to increase their capacity to 2,400 to 4,000 kg from 2,400 kilogram earlier. So on the back of their expansion plans, keep an eye out on this counter as well. BPCL, meanwhile, has received an order from the excise department to the tune of about 1,820 odd crores. The company, of course, has said that they will file an appeal against this order. So keep an eye out on all these counters, which will be in focus today.
All right, thank you so much for that, Ashesha. But with that, it's time for us to slip into a short break. Don't go anywhere. We'll be right back. This undertaking was given when Supreme Court was hearing Meta's appeal against the NCLAT verdict upholding CCI's 213 crore penalty over WhatsApp, the APRI-WECI policy. WhatsApp has also told Supreme Court that it will comply with the CCI directions on data sharing controls. Harish from the Times Network gets us more details on this story.
The Supreme Court was today hearing the appeal filed by the Meta and Facebook against the rupees 2013 crore fine imposed by the Competition Commission of India, which was upheld by the NCLAT. The Supreme Court had FSC found merit in the NCLAT order that WhatsApp was sharing public data and for advertisement purpose, and said that it will hear the appeal against the rupees 213 crore only if the WhatsApp and Meta gives an undertaking that they are not sharing the data and they will not share the data. Today, Kapil Sibal, the lawyer for WhatsApp, appeared and gave an undertaking, an unequivocal undertaking that the WhatsApp was not sharing public data the way the court was perceiving. After this undertaking was submitted, the Supreme Court agreed to hear the appeal against the rupees 2013 crore fine on March 16. Remember, on the last date of hearing, the Supreme Court had pulled up WhatsApp, saying that you cannot be allowed to compromise, in fact, play with the privacy for your commercial gains. Privacy cannot be compromised, violated, and if you cannot work as per the Constitution of India, you can leave the country. You are only making a mockery of the constitutionalism. The Supreme Court had also said that unless you give an undertaking that you will not share data, we will not hear your appeal. The WhatsApp was clearly told by the Chief Justice of India bench on the last date that you are only a messaging service. What business have you to pick up data from and of the people and hand it over to somebody, Meta, for a commercial gain? So after this wrap, today WhatsApp filed an undertaking before the Supreme Court saying that it was wrong to say that WhatsApp was sharing public data. It was not doing so. So the next date of hearing in this matter will be on March 19. Back to you.
All right, thank you so much for getting us all those details. We're moving on to another big story wherein Tata Sons board will be convened a meeting today to consider the approval for N. Chandra's third term as chairman. Now remember, the Tata Trust board has already given their nod for the extension in October last year. Anurag Joshi joins in with exclusive details. Anurag.
Tata Sons has convened a crucial board meeting on Tuesday. The board will consider a key proposal to approve a third straight term for Chairman N. Chandrasekaran. Chandrasekaran's current tenure ends in February 2027, and last October, Tata Trust had cleared Chandrasekaran for a third term as the chairman of Tata Sons. Chandrasekaran was first appointed as the chairman in early 2017. That was in the aftermath of the sacking of Cyrus Mistry as the chairman of the holding company of India's biggest business group at that time. In February 2022, the board had unanimously reappointed Chandrasekaran for a second term as the chairman. The board meeting on Tuesday will also take stock of the financial and operational performance of various group firms, and this is coming at a time when the group is committing massive investments in new areas, including AI, semiconductors, and also EV batteries. It's also happening at a time when the group has flagged the transformation of Air India, owned by the Tata Group and the country's second biggest airline.
All right, moving on then, in a BSE circular, the exchange has announced the exclusion of 4 stocks from the futures and options segment. Now let's talk about the 4 stocks. It's Hudco, Piramal Pharma, Tata Technologies and Torrent Power that will be discontinued from F&O trading. Now, no new F&O contracts will be introduced from May 4, 2026. However, all the existing contracts will continue and expire as per their scheduled dates. Now, the move follows the exchange's periodic review of stocks eligible for derivatives trading, and that's how the exclusion will be happening today. So let's wait and watch out for how these stocks react in today's trading session.
All right, so let's watch out for all these counters in focus today. Yes, of course, with respect to this particular news flow, inclusions and exclusions do make an impact on the stock prices. But moving on to another story, and Finance Minister Nirmala Sitharaman launched the second phase of asset monetization pipeline of central ministries and public sector entities, National Monetization Pipeline 2.0. The second phase of the pipeline has been developed by Niti Aayog in consultation with infrastructure line ministries based on the mandate for asset monetization plan 2025 and 30 as announced in the Union Budget 25-26. But while addressing the media post, RBI board meet, FM Nirmala Sitharaman said that the central banks buying and storing the gold is a major reason for the surge in prices. She also believes that gold demand has not reached an alarming level yet. Let's go across and listen in.
Gold has always been a favored investment for households, whether as an asset class or for jewelry. So high-pitched demand from, let us say, the domestic consumption also sees a seasonal spike during festival season. We are watching it, but I'm not sure it has reached such alarming proportions, and therefore I think it has not gone in that sense beyond a certain limit. But of course RBI will also be monitoring it. Other than typically what's happening in the Indian market, it's also important, and I'm sure you from the media would have noticed, that most countries today, particularly their central banks, are buying gold and silver and storing them.
Moving on, then the RBI governor has also commented on this, saying that there is no systemic risk from the fraud at the IDFC First Bank. Let's listen into that.
We do not, as a policy, we do not comment on any individual bank or regulated entity. We are watching the developments. There is no systemic kind of an issue over here.
And SEBI Chairperson Tuhin Kanta Pandey said that the Capital Markets Watchdog will be undertaking a review of regulations governing the conduct of portfolio managed services. He said that the rehaul is necessary so that the framework remains effective, adaptable and aligned with the evolving market dynamics.
We would be undertaking a review of LODR and settlement regulations, of which the process is continuing. And we are also will undertake the PMS regulations in that spirit. This regulation was 2020 regulations, and in between, after 6 years, we have found that there are certain things which need to be rationalized. And based on industry and investors' feedback, we would be proposing. After that, as usual, we will have a consultation paper and you will get to know the scope of the regulations change, regulatory changes.
We have received a representation. I saw it on Friday, and we will see what we need to do on that. Because RBI had initially opened draft guidelines and sought their opinion, and many of them they would have done it. It is in relation to, I think, particularly the issues around the bank guarantees and how much collaterals have to be given for the proprietary trading and so on. There are 3-4 issues. So basically it's a matter with the Reserve Bank of India. But since the representation has also come to us, we will have a look at it.
All right, with that, it's time for a quick breather. Don't go anywhere. We'll be right back.
Its NBFC arm over the next few years, and under the proposed structure, Airtel will hold a 70% stake in the lending business, while the remaining 30% will be infused by Bharti Enterprise. Let me take it across to my colleague Ankur, who joins in with more details. Ankur.
Airtel is definitely planning to scale up NBFC ambitions, and therefore the company has decided to invest rupees 20,000 crore in its NBFC arm, and that is to scale up the digital lending per se. Now, these investments will be made over the next few years, and it will build a large digital credit platform. As far as the ownership is concerned, Airtel will hold 70% stake in the NBFC, and remaining 30% will be held by Bharti Enterprises. The capital infusion is aimed at expanding formal credit access, and that will be used during digital and data-led models. And overall, remember, there was a license which was received by the arm, and after that, this infusion has come in from the company. Now, this is built on a strong credit engine and analytics capabilities over last 2 years, and company wants to scale up on that front. Digital lending platform has already disbursed around 9,000 crore, and that is under loan service provider model, or which is called LSP. So all in all, the company wants to scale up NBFC ambitions, want to scale up digital footprint and through lending arm, and therefore now Airtel has decided to put in rupees 20,000 crore in the NBFC arm.
All right, watching out for Bharti Airtel on the back of that news flow. But let's talk about the mixed quarter for the pharma sector, with the Sun Pharma, Dr. Reddy's, Lupin and Zydus beating expectations, while Cipla missed the street estimates. And domestic growth remains the core strength, led by the chronic therapies and branded prescriptions. My colleague Rabinder is now joining us with a roundup of the pharma sector.
It was broadly a inline performance for the most of the pharma companies. A lot of companies beat expectation with a few misses here and there from the likes of Cipla and Piramal Pharma. And coming to the major themes we have seen this quarter, the most interesting and widespread theme is the run up towards the semaglutide patent expiry in the March, and multiple companies, almost all major players are preparing for the launches around March 2026, and we have Sun Pharma, Dr. Reddy, Lupin's, Mankind and many other gearing up for the launch in the first wave. And if we talk about Cipla, then Cipla has entered into a GLP-1 space via tirzepatide partnership with Eli Lilly, and Divi's Lab has not directly launched, but the company has exposure in this space, which is poised upstream as peptide fragment supplier, and this is turning out to be quite an exciting area to watch out for. That. And the second major theme what we saw in this Q3 FY26 was the growth seen in Indian business. Many companies' domestic formulation segment performed well, with the likes of Mankind Pharma, Cipla clocking double-digit growth. Mankind Pharma reported a growth of 11.1%, while Cipla also reported a growth of 10% in Q3 FY26. And branded prescriptions and chronic therapy seems to be key drivers here for the companies. And in addition to that, we have also seen the pressure in the US business moderate impact from the dropping G-Rev limit sales to be bottoming out with product specific opportunities bringing diversification. And we did see some companies faring extremely well in the US business, namely Torrent Pharma, Alchem Lab, Lupin, where Lupin US sales grew by 54% year-on-year basis in Q3 FY26. And however, volatility and uncertainty is expected to be continue in this region for the sector as a whole. So yes, overall it was some inline performance with GLP-1 excitement and an improvement in domestic formulation segment, where a few key trends with the Indian pharma players have witnessed in the Q3 FY26.
All right, thank you so much, Ravinder, for getting us all those details. But at the India AI Impact Summit 2026, over $277 billion in AI infrastructure investments were announced, nearly 6.3% of India's GDP, and the lion's share of that money was headed into one space, that is data centers. Let me take it across to my colleague Ashisha, who is here to give us a check on India's AI ecosystem. Ashisha.
Well, yes, data center is a big opportunity, not only for India, but for the world as well. But first up, let's put the spotlight on the capacity expansion plans that India has in data center and the AI business. Now, as far as a capacity expansion plan is concerned, India's data center capacity stood at 0.86 gigawatt in 2023. which shot up to 1.93 gigawatt in 2025, and this is expected to rise exponentially to 4 gigawatt by 2028. That's the kind of data center capacity expansion plan India has. And for this, several Indian and global companies have made and committed several investments. First up, let's talk about Indian companies, and then we'll talk about global commitments as well. Reliance Industries has committed $110 billion over the next 7 years. This is for data center expansion. We have Adani Group, which has committed $100 billion over the next 10 years, and Tata Group that has also announced partnership with OpenAI and AMD and several other global companies. So Reliance Industries, Adani Group, Tata Group, all of them have made big commitments for data center business going forward. Reliance Industries has made it for data centers and green power. Adani Group has made it for renewable hyperscalers, and Tata Group meanwhile for edge computing. So that's the capacity expansion plan and commitment that Indian corporates have made for AI and data center business. Let's also talk about global commitments then. And first up, Microsoft. It has announced a commitment of $50 billion. Google has announced $15 billion Vizag AI hub. So that's the kind of commitment global companies have done in India's data center opportunity. For Google, it's for subsea connectivity, and Microsoft, as I mentioned, has announced a $50 billion commitment. Let's also talk about the kind of companies that tend to benefit on account of this opportunity. First up, it has to be real estate and infrastructure developers, because they tend to give their land and their property to develop AI data centers. So real estate and infrastructure developers tend to benefit. We have AI computing and cloud computing companies, hyperscalers, integration and AI applications. So these are some kind of companies which tend to benefit from this data center opportunity. IT services, renewable energy, and several corporates like Reliance Industries, Adani and Tata Group, which have made their commitments to AI data centers, will also tend to benefit. So clearly, data center is a big opportunity, not only for India, but also for global leaders to invest in the Indian ecosystem.
All right, Shesha, thank you so much for joining us with that. But let's talk about the FMCG sector and how they fared for Q3. It was a mixed set coming in, with staples throwing a clear volume-led recovery, with a select few seeing the margin expansion. Management commentary points to stronger growth and improving profitability in FY27. Snehi is now joining us with a detailed roundup. Let's take a look.
Well, yes, so it's been a very good quarter for FMCG companies. We're only talking about the staple companies over here. The staples have made a comeback this time around, and how in terms of revenue expansion, volume growth, as well as margin expansion for most of the listed FMCG staple companies. Q2, yes, was the marking of a recovery. Q3 has been even better. The GST cuts have panned out really well for the FMCG sector. Now that that impact is behind them and the GST transition is completely done. Let's take a closer look at a company-wise performance for HUL, the market leader. Mixed moves coming in, revenue growth of about 6%. Volume growth this time was exceptionally strong, a beat towards the street estimates of 4%. On the flip side, the margins did see some contraction at 23%, which is still on the upper end of their guided range. For Nestle, it was the beat all round, very healthy quarter this time around for them. Yet again, 18.5% uptick on the revenue. Volume growth is estimated to be in double digits, so very strong growth over here. But they also saw some margin contraction this time around. For Britannia also, yet again a good quarter, revenue growth of 8.2%. The company doesn't give its volume growth, but we're estimating this metric to be really strong. And here the margin expansion has also taken place rather beautifully at 19.7% compared to 18.4%. So it's a margin bips expansion of more than 130 bips on a year-on-year basis, looking very healthy. Following that trend is also Tata Consumer, largely inline set of numbers, 15% revenue growth, 15% volume growth, very, very healthy numbers here too as well. And the expansion in terms of their margins has been to the tune of 140%, so very healthy moves here too. Godrej Consumer, beat versus estimates, good revenue and volume growth, margins expansions yet again to the tune of 140%. ITC, inline set of numbers coming in, about 6% revenue growth, and the 7% volume growth that we've seen in cigarettes this time around is also looking very healthy. Margin expansion to the tune of 50 bips here as well. For Dabur and Marico, both reported inline set of numbers, 3% volume growth for Dabur, but 8% volume growth for Marico, looking good. Dabur saw margin expansion, Marico
also margin contraction. So that's in a nutshell the roundup of some of the FMCG staple companies. Just taking us through some of the important highlights and the commentary in terms of guidance. HUL, they expect FY27 to be better than FY26, and the consolidated EBITDA margin will be in the guided range of 20% to 23%. For Nestle, this was their strongest volume growth in nearly 5 years, and all 4 product groups have done really well and delivered volume-led growth. For Britannia, they expect volume growth to be asymmetrical. They're not ruling out any inorganic opportunities. And mainly what they said and what stood out is that they're going to be adopting a startup mentality to combat competition. For Tata Consumer, the growth business grew at 30%. PAT growth should be higher than revenue growth going ahead is what they've said. And margin growth in Q4 should be between 14.5% to 15%. Coming very quickly to Godrej Consumer, they remain confident of achieving high single-digit consolidated revenue for FY26. Dabur, they say that Q3 was strong. Q4 is expected to be even stronger. They also expect high single-digit growth in Q4 and FY27. And lastly, when you talk about Marico, they say margins will improve next year. They aim to grow their foods business at 25% CAGR. They're also aiming to expand their digital-first portfolio. So outlook looks very good. And the numbers this time around have also been very healthy in terms of revenue expansion, volume growth, and of course for some of these majors, margin expansion as well.
All right, so that's how the FMCG sector fared. But let's talk about the select stocks from the industrial space that will be in focus on the back of a Citi note. The brokerage firm has shared its pecking order and outlook for ABB India. My colleague Karan is now joining us with the details.
Well, taking a look at Citi's take on India MNC Industrials, the brokerage remains bullish on Cummins, followed by a neutral rating on Siemens. And as far as ABB is concerned, the brokerage has maintained a sell rating on ABB with a target price of 5,050. Now, an important point to be noted here is that there is an upward revision in the target price to the tune of 6%, as earlier the target price was around 4,750. The company's Q4 underlying was weaker than the headline results. While the management has turned positive on the demand outlook versus the earlier quarters, the management has also informed that it may be too soon to call out a definitive trend on the demand. The brokerage remains concerned on certain competitive pressures on the back of the capacity additions prevailing across the industry. And as far as the order book is concerned, the data center space is charging ahead with a very strong momentum. The large orders typically come from the process automation division. And remember, the Q4 order inflows for ABB India were at a 5-year high level at around 4,000 crores. And lastly, the India-European Union FTA presents a scope for higher long-term growth, though the timing remains uncertain and could be long drawn.
And well, speaking on the sectors and stocks that Manishi Rai Chaudhary would prefer to look at, he says that he is positive in domestic-facing sectors. Let's listen in.
I would rather continue to play the Indian domestic story wherever I can find growth juxtaposed with reasonable valuations. And there are some opportunities in that area. We have the basic materials, like Tata Steel, Hindustan Zinc. They have very strong growth forecasts going forward. They're also having earnings estimate upgrades consistently over the last 6 months. Some of their valuations are not really that expensive. I would also focus on select industrial companies. We have seen how L&T has performed, for example, over the last month. I would expect that some of these companies which are focused on both domestic infrastructure and defense would continue to do well. One has to be a bit selective about the valuations here. I would continue to focus on the consumer discretionaries, including autos, travel and tourism, jewelry, etc. So this is, in India, it's difficult to take a broad brush call. One has to be a bit selective and look at the individual sectors and stocks, but there are opportunities over there.
And moving on then, all 7 people on board were killed after the Ranchi Delhi air ambulance crashed in Jharkhand. The Red Bird Airways Beechcraft C-90 aircraft went down near the Seema area shortly after the takeoff on a medical evacuation flight. Now, 2 crew members and 5 others were found on board. Rescue teams reached the spot and authorities have launched an investigation into the crash. And well, NASA has delayed its moon rocket launch due to the unfavorable weather conditions. The rocket will now be rolled back to the vehicle assembly building waiting at NASA's Kennedy Space Center, which with teams targeting nearly early Wednesday for the next move. Now, the mission is a part of the NASA's Artemis program, which aims to return astronauts to the moon and prepare for future missions to Mars. And well, with that, it's curtains down on this edition of Market Cafe. I'll take your leave. Thank you so much for tuning in.